Hello, hello. Welcome to Thoughts for the Week. Today we'll be talking about gold. The choice of the subject is pretty much based on the fact that gold is trending as a talking point for a lot of investors lately. And it's doing so because the trend, if it continues on its growth trajectory, it will end up being the highest the gold price has been. And you often hear in times of political strife or financial crisis, everyone all of a sudden is looking for gold to buy. And today we're just going to figure out if that is actually the right move. So, Mo, tell us gold as an investment. What are your thoughts?
Yeah, thanks, Andreas. Gold as an investment has a couple of uses. Some of the objective reasons for owning gold is as an inflation hedge. It's outperformed inflation over the last 4 decades, over any sort of period. It's a great diversification tool if used correctly because it has a negative correlation to equity. So in other words, when shares move down, it'll move up and vice versa. And then, the other great thing is it has an intrinsic store of value. So gold has a price and it is worth that price no matter where you go in the world. And because of that, it's a great transfer of wealth benefits. So, from the stories around the Second World War of people escaping Germany with gold sewn into their jackets, all the way to, what we talk about, in terms of worst case scenarios. Yeah. So, another great reason to own gold is if you really do feel and are worried about a financial system collapse, it's a much safer option than other currencies or assets that one could actually hold. And it does act as a safe haven during economic turmoil.
And that's pretty much because you can physically hold it. I
Yes,
mean, it
that's
is
right.
a physical asset, just like any, obviously more easily transferable than some of your bigger things. You can't exactly walk around with a can of oil, a
Yeah.
drum of oil,
Yeah, and
or
even
your
something,
house.
yeah, and even
So
something like silver. I mean, silver is also a great store of value, but physically, it's multiple times the size of gold in terms of physical size for value. So that's why gold has always just been a great way to hold value.
also doesn't disintegrate, doesn't. I
Yeah,
mean, it's permanent, which
can't
is
lose your
great.
password for, yeah.
Yeah. And okay, so how would one go about buying gold? I mean, do you just physically have to go and buy a gold bar, or are there other ways into getting into the gold market?
Yeah, so there's five main ways that you can actually own gold. The one that most people won't know about is the door bar. So door bar is just very raw. It can contain other metals like silver. It's less refined and regulated than other forms of gold, and it's generally produced through mines like the next way of owning it, or through metal recycling. Another way is, as you mentioned, bullion. So you can actually go and buy physical gold. Very difficult to do, actually. You can buy gold coins, which is where most private individuals own physical gold. So like Kruger Rands, which pretty much 95% of that value is just tracking the price of gold. And then the ways we prefer in client portfolios, for instance, to own gold is either by buying gold shares, where you're tracking partly the gold price and then partly the underlying performance of the company, and then a gold index or ETF, which just tracks the price of gold, either in rands or dollars, like that.
So when you say a gold share, would that be a share of a company that mines gold?
Yeah, yeah. So it would be like Anglo Gold Ashanti or something else. And then obviously you're picking up other risks in that equity or share. So just, yeah, as an aside.
Hmm. So what would you say if you had to make a list? What are your like pros and cons to gold?
Yeah, so the pros, I think, are very much the reasons of owning gold, which we chatted about in the beginning. I think the main ones being as a tool of diversification for a percentage of your portfolio, 5 to 15%, depending on how much you like gold. And the only other real one I would say is as a hedge against country risk, as we've mentioned before. The cons with gold, unfortunately, gold as an asset, it's the only asset class that actually doesn't pay some form of a income. So it doesn't pay interest or dividends. And because of that, over certain decades, there's like 2 golden decades in the last sort of couple of decades where it's outperformed most market indexes. But if you look at most other decades and long periods of time, just looking at the Dow Jones or S&P, which is world markets, or even the JSE, have actually vastly outperformed gold, just simply because when you invest in a stock market, you actually own the share, but that share then pays dividends, and those dividends compound for you. Whereas gold, you're just literally tracking the price. And just as an example, if you look at the last 10 years, which has been really volatile for stock markets, but for gold over the last 10 years, it's been actually relatively flat in terms of price. Whereas something like the Dow Jones or S&P has delivered between 100 and 280%, depending on if you include dividends or not. So looking at long-term investments that actually can compound and pay some form of an income or dividend is actually critical. And that's probably the biggest con for gold, is if you as an investor decided to, let's say, put 60 or 80% of your store of wealth into gold over 20 or 30 years, the opportunity cost or loss of returns from other markets, it would be tangible.
Sure. Interesting. And then just on a side note of that, could then one use gold as a replacement, as a substitute for cash in their portfolio?
No. So cash is seen as an extremely low risk asset. So cash, if you look at any graph with regards to cash or money market, it's pretty much flat, even through times like COVID, 2008 financial crisis. Cash also does pay an interest. That's how you actually get your return in cash. Cash, especially money market, actually doesn't give you any capital return. It just gives you interest return. Whereas gold is, funny enough, probably, if cash were 2 out of 10 on the risk scale, or 1 out of 10, gold would probably be 6 out of 10, because it can be volatile. It's priced as a store of value, doesn't pay interest. So yeah, no, definitely not.
Okay, great. Yeah, great. I wouldn't have said gold would have been that high as a risk factor. That's
the reason why.
a little bit mind blowing.
Yeah, and the reason why is, if you, as a final point, shares, so the JSE would probably be 7 or 8 out of 10. Bonds are like a 4 out of 10, and gold would fit somewhere in between there, just because of the different risks associated with gold and the fact that it is volatile. And remember, the one risk with gold, which we haven't mentioned, it's the only thing that can get stolen out of your safe or your house or your safety deposit box. You can't steal someone's ownership in shares. So there are risks associated with that. Yeah.
Okay, awesome. Thanks for that, Mo. Thanks everyone for watching. If you enjoyed the content, please don't forget to give us a thumbs up and to subscribe to the channel. Just a disclaimer, these are our thoughts and opinions and not to be misconstrued as advice. Cheers.